The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the Monday early edition of the Tiger Technicians Hour, and we're looking at a market that every Sunday night for the past, 4 weeks, maybe it's even 5 weeks, there's been just a huge rollover. The market just tanks overnight. In fact, it was over 400 points down the Dow, over 60 points in the S&P, and lo and behold, S&P came all the way back. You know, that last night the S&P was down sharply, then it came back to just about like a -8, and then it went down to a -60, and now it is only -33. Buying keeps coming in. And that's very interesting because the YM you can see right here, this is Monday the 2nd of February. We've just begun February. The market hasn't officially opened. At 9:30 it does, and this is at 8:07 in the morning. So we're looking at the Dow futures down 80. The S&P futures are down 31, I believe. Yep, down 32. Let's go to the NQ, right? The NQ trading right now down 192, 25,476. The SMHs, the semiconductors, pre-market are down 7. Just the other day, they were at 420. Now they're at 396. And Thursday was a high, all-time high. Friday was down, and we'll see what's going to be today at the close. Let's go to the Russell 2000 RTY. Down 12 at 2612. I just need to look at the IWM, the actual cash index, which is at 258.42. And let me just make a note of that while I can, because we took a little bit off to 42. We've been long for some time, but it's really prudent to be taking as much as you can of just in this particular phase in terms of your trading positions. Gold. Look at this chart. Gold hits 56, was it 26 the other day? Let me just double check that because this is the futures and the price changes. 56.26.8. So I'm going to just put that in. It'll probably change in another day or two. 56.8. And where are we now? We're trading, well, after being down to 44.23. 4,423. That is a huge move. Look at it. You took out a couple of weeks worth of sideways of incredible rallying action. But actually, you're now up 58 at 4,802. What a seesaw, right? But the impact of this candle, the Friday candle, it's going to take a little while to repair that. Let's go on to the, I'm not doing the update. I'm doing the my show. So I can go on to silver. Silver's up 4.5 at 83.08. It hit 121.78 on Thursday. And this morning it was down to 71. 121 to 71. I would say that a 50-point decline is quite something. 50 points, it's not 50 cents, 50 points in silver. Let's go to high-grade copper. High-grade copper right now is down 11 cents at 5.81. It was at 6.58 just 3 sessions ago, and this morning it hit 56.40. Well, yeah, this is some damage. I want to go to crude oil. Crude oil right now is trading down 3 1/4 at 61.98. It made that leg D and then a peak D. It's in the 66 area. This morning's low is in 61.94. Yeah, just continue the sideways move. Isn't that interesting? It looked like it was accelerating higher last week and then it just stalled. I do want to go to bonds because I think that that's still something you just can't ignore. Down 330 seconds. Not doing very much. Not doing very much is actually quite good. I meant to put this as a down arrow. The weekly chart is in a sell mode. That's interesting, right? So that means that yields are going higher. But the fascinating part of this is that it's still within a range. It's bouncing up and down and up and down, up and down below the 9-period moving average, not breaking positive, but look at this monthly chart. It's just been going on and on and on. As long as it goes sideways, it's not so serious. Now, I need to do a couple of things. The VIX index. The VIX index is trading at this moment. The VIX is up quite sharply. It's at 18.69. 18.67, up $1.23, had a big spike to the upside, then pulled back. But look at this. It's over the 200 period moving average. That started on Friday, but it closed right on that 17.49 level. Today, it popped up to 19.96. So the day is young. It seems to me there's rotational buying, and this is going to be so fascinating to monitor over this week, a really important week coming up, first week of February. Why? Because look at the way the steadiness. I'm using Chapman wave notation, even though for decades I'd said, I use notation just because it's a habit of mine to notate everything that's got a peak or a trough based on the Chapman wave methodology. But I don't treat it as the gospel. But for a long time, it's amazing. Look at this. For a long time, we've got full body counts here. Peak A, B, C, D, E, F. Regional Bank, October the 17th, 28.99. And then we come tumbling down to 15.62. October the 27th. That's only 10 days later. And that's not even, that's calendar days, not market days. And then it goes peak A. Oh, I've got to change that because it's moving, always moving. A, B, C. It goes to a D. Pops up to 28.27 for a 28.99 October 17th, 2025 high. And then a retest at 28.27 in leg E going to a peak E. That was everything else plus rates. High of the week, of the 20th of November of 2025, a month later. And what do we get? Peak E, and it comes tumbling down and it goes all the way to the 13.38 level. And then it goes peak A, B, C, D, E, pops up to an F, pulls back, goes to that high of 20.99, pulls back, and now we have a high today of 19.96. So I'll put in 20.29, although these prices do change because it's a continuous contract. But in the meantime, we'll put it in and see what happens. Are we going to test that? Now, I'm going to make it as clear as I can. This is a rotational correction. And therefore, within every sector, you've got something that's doing well. But wow, you've got stuff that with the hot flyers. Look at this Robin Hood, hot flyer. All of 2025 screams up to the 152 level. It was 152. I think it was 153.86 with 153 round number high, October the 6th. And lo and behold, what are we doing now? We're at 95. 60 points low. That is a huge move, right? And look at this, arches over one dreaded ace, second dreaded ace, Robinhood. Why? Because look, Bitcoin, and I see it tied to Bitcoin. I've spoken about that for ages. The high of October, the week of October the 10th at 127,750, we're double topped. I said, be careful, be careful. Even though we're long, we're still holding this long position. Wow, it's been a trial too. We've taken quite nice profits off it, but we still kept a little bit. But even that little bit's underwater. Not underwater, but it's pulling back sharply. And here is down 5,855 at 78,250. Wow. Under the 200 period moving average in the weekly chart. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, we're back. This is the early edition of the Tiger Technicians Hour. Remember, my service is the opening call. And yes, we did go short the Dow last week on Thursday, I believe it was. And we are looking to see whether or not we can add another short in a particular sector. And it's actually, it's not a simple thing, because let me just show you this. I'm going to go to, I want to go to the cash. So here we go. Here's the cash. Here's the Dow, the close on Friday. Look, the 9-period moving average hasn't gone pink. In other words, the 9-period moving average has not gone underneath the 14-period exponential moving average to change color to be negative. But the MACD is weak. The relative strength is not bad. It's kind of weakish. The stochastic's weak at 52%. On-balance volume just turned down with the price. I had spoken about the 49,600 as a tremendous a cap on the market. It's like a roof over his head, just couldn't get through. I still think that's the case until we conclude this pullback. We'll see what happens. So the cash, let me show you the cash index for the S&P. Look at this, S&P leg D. We were waiting and saying, is it even possible for the S&P to go to the 7,000 level with a leg D and then start to pull back? If that's the case, then we can make it as simple as possible. The leg D is where other things can happen. And so we are ready because the daily chart gives you all the clues, and the daily chart is starting to weaken, but 9 is still, well, good. I'm very nicely over the 14, right? Now look at this. If you're looking at the weekly chart of the S&P, the 9 is very strong. So I'm anticipating I'll use the rule of the rectangle, Chapman wave rule of the rectangle. If at any point there's a daily close below 67.50 in this move down, and that's huge. I mean, that's talking a big pullback. But if there is, then be careful, because we are then headed towards the 6,600 level. Just make it as simple as possible. Right now, there is still residual strength, and that's all you really want to know. So therefore, we haven't gone heavily short, although there have been some stocks that have, as I showed before, Robinhood, which really turned down sharply. And then with some that were doing very nicely, we also have Rocket Lab, and it's now down sharply from the high of 99.58. We're still long from the 48s. And all I can say is that I'm watching these closely, because Rocket Lab was in its own momentum. And then the high that it made around about the 16th or so, what was that? The 16th of January at 99.58. This is a big pullback to 78 right now. That's 20 points. It's a big number. Talking almost 20%. What are we looking at here? So I'm saying that there are certain areas, certain stocks that have held well, and there are certain stocks that are just, this is not one of them, but Robinhood and some others, Palantir. Look at this. Yes, Palantir has earnings today, I believe. Earnings come out this afternoon, maybe. Yeah, I think it comes out. Oh, no, Palantir. Where did I see that? Yeah, I think it's today, after the close. So it makes a high of 207.52. Then it does this Chapman wave arch formation, the dreaded H. And on a weekly basis, last week it took out the left side low of 147.46. I'm watching this closely. So let's just say earnings come out, and the earnings are pretty good, but there's some uncertainty. That's not good. It has to be a blowout to the upside, a really pleasant surprise, and everything that everyone thought that they were getting nervous about. How silly to get nervous. This is a fantastic company. Well, look what it has to do. It has to go over the 200-period moving average at 154. It has to go over 160.61, which is the pink 9-period moving average. The 14 is at 164.68. To break for this 9-period moving average to go green, you're going to have to look at 178 to 180. Well, 180 is 30 points above where we are. So I don't know what it's going to do. Just turn the corner when the technicals, this lowercase h pattern, this is not a good pattern. It becomes a very good pattern if it can scream up to the 160s, to 165 in the next. It has to be this week. And by the end of the week, you have to obliterate this red candle. That'll be outstanding action. But that's just asking a lot of a stock that's just gone nowhere. At least since, I'd say, the third week of January. Third week of January. Wait a minute, that's not so far away. Third week of January. December, that's right. I was going to say January. Yeah, December, 22nd of December, it made its high. Right, so what are we looking at now? We're looking at a rotation through different sectors. There were a couple of stocks that I want to look at. I didn't realize they were coming out with earnings this week. So advanced micro devices, being on an absolute tear. Potential double top, and let me just say, doing my show, I'll get back to you soon. All right, so we've got our advanced micro devices, 227.30 back in March of 2024, just comes crashing down to the 70 area. I think it was 68 or 70, 76.48, April. And what does it do? It screams all the way up to 267.08, October of last year. And what did it do just a week and a half ago? It goes to 266.96. I mean, really, within $1, right? And it's still holding pretty well. It's down today, down 2.34, 234.39. But that double top, we've seen so many of these double bottoms and double tops, and then they become pretty serious shorter-term resistance levels. So unless advanced micro devices by Friday has screamed up into the 260s. So this is a peak A, B, C, and we go to a D. D is where other things can happen. That's the objective of buy signal, to go to a buy mode and go to a D. Went to a D right there. So we're going to be watching this in the 266 area. It pulls back, and now it's at 234. That's a big pullback. So advanced micro, what are they going to do with earnings? I think the earnings for the semiconductors looking out, it's the looking out, I think, that is going to, not what they've done up until now. Some of them are just blowout numbers, just fantastic numbers. I think it's going to be a little more difficult. I mean, the chart seems to be indicating that. So is there another semiconductor in that area? Semiconductor, I can't see it right now. Don't want to take too much time looking for it. So that is on Tuesday. And then you've got, this is a very interesting week. You've got Uber coming out this week. So Uber Look at this. Oh, you'd think that Uber would be doing so well. I keep saying to subscribers, we've got to get into Uber. I think we've been in just very briefly, but really, basically, we've stepped aside. And then I got worried on that very sharp pullback in December, and it ran to a peak A, B, and sort of it went to a C above the 200-period moving average. Yeah, I'm a little worried about Uber. I don't know. I don't think it should worry. I should worry about it. I think it's doing fine. But it seems to me that, well, first of all, prices are out of sight. You used to think of the cabs, and the cabs got out of sight, and then all of a sudden they had this terrible thing that came along called Uber, and Uber was just the king. Now I think Uber is in the category where you say, you're kind of starting to charge a lot of money for these trips. And maybe that's what we're looking at here. I'll be back in a moment. Basil Chapman, early edition.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hello, so we're back, and we're looking at, as I say, Uber is down 34 cents at 79.71. It looks to me that sometime this week it should tag 78.31. Is that? Yep, 78.31, the low of the 12th of the low of the 19th of December. Look, here's the Chapman Wave Inside Track Propellant Zone. The 9-period moving average is so far above the 14, I'm not sure that it'll go underneath and stick underneath the pink 9-period moving average uptrend middle mini channel that I call the Chapman Wave Inside Track Propellant Zone. If it starts to trade in February by the close, it's underneath 76. It's trading right now at 79.71. That'll make that a resistance level. Next question came up. Could I look at, where was it? Oops, I wrote it down. Yeah, so this is interesting. So over the weekend, I'm looking at Investors Business Daily. I wonder if I can get there now. Let me just see if I can get it. Yeah, Investors Business Daily. And I'd noticed, I'd mentioned this at some point about maybe a couple of weeks ago, or maybe 2 weeks or so ago. I said, I can't believe how many mining stocks are on the list of the top 50 of the IBD. I said, usually that portends ill. At the same time, I said, it's the second time that it's been like this. It was like that a little earlier on. I think it was maybe in November. And then they kind of, there were not that many. And now look at this. Here we go. Look at this. This is MU. So this is Micron is number 1. IAG, IM Gold, number 2. Then Fixed Comfort Systems, number 3. Anaptus Bio Inc. Then comes so we've got the same thing now in the pharmaceuticals and the biotechs. It also started to come very strongly onto this list. So Minim Pharmaceuticals, then CDE, core mining, which we have from under 8, and it went up huge, and it pulled back very sharp. So there's core mining, GFI Goldfields, Rocket Lab, which we also own, and then Orla Mining, KGC, Kinross Gold, AU, Anglo Gold, Ashanti. As far as I'm concerned, when I see the numbers increase like this, I say, oh, Ego, Eldorado Gold. Let me just show you a couple of things here. And I thought this is fascinating because I started to see round numbers, remember, just recently. Not that many. So let me just show you this. So AIG, that is. This is IM Gold, leg G/C in the monthly chart, leg F in the could be an instant restart, but I'm calling it an F for now, red, a weekly chart. And look at that peak E in the 2240 area. And all of a sudden, we're down in the 18s. Today's at 18.02. Look at CDE, core mining. I don't want to take anything else off. We've taken off. We had some really good gains. I haven't added to it, haven't subtracted, just sitting there. It's at 20.21. It hit 27.77, peak E. Made the dreaded H pattern right there. Look, arches over with dreaded H. Leg F/B in the weekly chart, leg E in the monthly chart. Whew, what a move. Let's go to the next one, GFI, Goldfields. The South African stock, 49.46, down 56 pre-market, or down 66, makes a 61.64 all-time high. Peak E, leg G/C in the weekly, leg D in the monthly chart. I mean, I can just go on and on. So I had some of them that I wrote down the round numbers. I'm not going to do that right now. I just mentioned that there are round numbers. I don't think I've done all AR. Remember, every chart you see hand charted. I'm still working on my software here. I haven't got that far yet. Peak D at the 20 area, 20.05. This is all of mining. Leg C. Now, this could be an alternate count. I should have put G/C. This is a G/C in the weekly chart. Here we go. G/C, alternate count. And a leg E in the monthly chart. Let's go on. We can go to KGC, Kinross Gold, KGC. Oh, type it over here, mister. All right there. So I'm just showing you the seriousness of this pullback. I don't think it's a one-off. I think this is telling us that gold and silver are in for at least a couple of weeks worth of digestive gains. 31.02 in KGC, 39.11 all-time high. Leg peak F, leg peak D. No, it's a leg D. In the weekly chart, it'll be a peak D this week if there's no new high, and leg E in the monthly. I'm just saying that they were due for a thing. You remember, if you listen to Tommy, we've been talking about that for some time. It's his specialty there, gold mining stocks. And he's been saying it's just parabolic is parabolic, and you've got to be ready for some kind of a pullback. The trouble is that when the pullback comes, it isn't a pullback, it's a waterfall cascade. I mean, look at this, 115 Anglo Gold Ashanti just 3 sessions ago, trading now at 92. Peak E in the daily, leg F in the weekly, leg E in the monthly. And these monthly charts, leg Ds and Es, it says to me, just be ready for some kind of a pull. You should have been prepared. We spoke about this for quite some time, that you've got to be taking money off. The way we do it, the way I do it, is for subscribers. We take a little bit off, and it kind of adds up so that you've got a decent bit off, and then you have some kind of a stop if there's a major calamity by pulling back. But you've rewarded yourself for being both diligent, being observant of different levels that had to be hit, and ready for some kind of a pullback. This is a little bit more than, look, this took out a couple of weeks worth on the left side. So you just have to be careful. Enough with that. I want you to show you the dollar. So you think, the dollar must be screaming to the upside. Well, it's turned around from the 95s to the 97s, but it's only up 13 ticks. Remember, this is something it took me quite a while to understand. And then a year and a half ago, I said, I'm starting to look at this market, and I'm saying to you that my little mnemonic, Bondy, Crudy, Dolly, Goldie, Vixie, it just doesn't apply. That is, bonds, when bonds go down, yields go up, and the market invariably comes down. That was the historical, the general consensus was that that's kind of what happened. That had been changing. Now it's changed a lot. They're kind of independent. The dollar, when gold went up, and look at the way it went up, the dollar should have got creamed. Well, the dollar, if you look at it percentage-wise, that did pull back very sharply from 114.78 back in September of 2022 to 95. But think of a stock. I've shown you some stocks that have just done that in 3-4 days. So this is it doesn't go that way as it used to. The parallels, the counterpoint where one goes up, the other one automatically goes down. That's out the window. It's the same thing even with the VIX. So I'll be back in a moment. Basil Chapman, early edition of the Tiger Technicians Hour. Dow futures are down 36. Is amazing. It was down over 400, and the S&P futures are down 30.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're looking at Ulta Beauty. Ulta Beauty, as I said before, this is a very mixed market, even in the same area. And here it is, Ulta Beauty is cosmetics, doing very well so far. That was a D, wasn't it? No, this is a D right here, G. Then it goes to an E, and then it turns down a little double top. So this is fascinating. So Ulta Beauty, you remember this was one that I was looking at in 2023, and I said, very interesting. Ulta Beauty is being challenged by ELF. Not that I know too much about these things, but it's ELF Beauty. And that was back in there was that double top that was made. And I said, wow, they all look very vulnerable. And then they came down. We didn't go short, unfortunately, but it was, what a spill. I mean, ELF Beauty goes from the double top at 220 down to the 50 area. Ulta Beauty, I remember seeing them in Target, and now they're not there anymore. But they've had a tough time, and now they're just on their way back from the 300 level, more than double. It goes to 600, little double top there at 695.34 on the 21st of January. Pulls back. There's the round number. 677 round number on the 22nd was the low, and then we do a double top at 69.34. And it comes down. It's a big number because it's up in the hundreds and hundreds. Yeah, so it goes down to, right now it's at 64.00, down 236, but it went from the 680s down to the 624. I mean, percentage-wise, that's big. And then there was one other one called ODD that I was following, Odd. This is a company called Oddity Tech. It was kind of a revolution in the sense that they came out with a new product, a new way of making the cosmetics, and it sounded like it was just great. And we actually had it once, just very briefly. It didn't work out. I just didn't want to waste time. Wasn't working out. And look at this. So look at this. This goes from the almost $80 to $32. I mean, and that's what I'm saying. Within sectors, you've got this going on. So if we were looking at advanced micro devices, look at advanced micro devices. AMG, that was a mistake. AMG is Affiliated Managers Group. This is a nice looking chart, huh? Just pulling back a little bit. Yeah, AMG. Let me just, AMG, just putting it down here. I'll look at it later. So AMD, so advanced micro devices, look at that. Near the all-time highs. Look at NVIDIA. It's just been stuck. It hits this level right here. It goes to 211.34. That was 212.19 on the 29th of October. Double tops. The double tops are amazing. Look at this. Pulls back, and then comes back to within a point of the previous high, 211.34, and then that's it. Goodbye. And then it makes this double bottom, and it rallies. So look at that. It hasn't been able to get to the 210 area. It held the support, but it's at 188. It's not breaking down. I'm just saying it's not leading. So whatever happens, this coming up with in the semis, we're going to be watching very closely. Question came in about NAT, which is Nordic American Tankers, trading at 4.08, down 8 cents. Yes, this has gone to a leg E. A leg B. I'm calling this a leg B in the weekly chart. That's very positive. And this is oil tank. They ship oil. So look at this leg C in the monthly chart. So you have to have some patience. Does it digest in this area? Could you get it here at 418 and say, you know what, I don't care. It could go down to 380. I think this is going high. It's leg C in the monthly. It should go to a D. I have patience. That's one way to look at it. But just on a short-term basis, I would say that this area right here, I think it's going to retest that. So it should go back to the $3.95, maybe $4, between $3.95. What is the low here? $3.93? $3.94. $3.94. It should come back and test the low 390s. That's what I'm thinking. But this is looking very good. So you've got to be very selective. Merck, yeah, I'm looking at Merck because Merck has earnings coming out. Is it Wednesday? Let me have a look. Merck is a big pharmaceutical company. I saw it somewhere. I think Eli Lilly comes out, and I think Merck comes out the same day or the day before. Well, Merck, I believe, is coming out. I can't see it right this very moment, but I thought I saw it earlier on. But look at this. This is the pattern I love. Look, Chapman falling axe formation, or even you can think of it as just simply put, a channel. I worked with channels and trend lines ever since I began technical analysis. I just love them. So that was a peak E right there. This is Merck, MRK, trading at 110.71, up 44 cents. So this is the market right now. You've got to be aware that the other areas, the defensive type things, like the pharmaceuticals, not all, but like the pharmaceuticals, and I would even say, so there's peak C. Call that C1. Call this C2. Okay. Yeah. So all you need to see for Merck is a close. It can't just pop up and break. You want to see a close in the 112s so it can tackle the most recent highs. And that was the high of 1280 or something, 112.90 on the 8th of January. I like it very much. And the fact that the 9-period moving average, it pulled back sharply and the 9 held and it sprang to the upside. That's a very good sign. Yes, good eye. And AEM, I want to say AEM. Yeah, I like Merck very much. It's gone to, I'm calling this EF, I'm calling this a C. Peak C in the weekly chart, I think Merck goes higher. In this environment, it's a perfect foil, and it gives you a dividend, but that's not really the position to have. Because as a stock, as a chart, it looks good. AEM, Agnico Eagle, trading at an all-time high, 229 round number on Friday. Has a little problem. It's at 188 right now. So I would say that the area of 183 to 180 is going to be imperative for monitoring. 180.49 is the 14-period exponential moving average in the weekly chart. It's only taken out 3 weeks worth of work. It's in the 4th week on the left side. So it's still early in the digestive phase. Agnico Eagle, round number high, 229. Trading right now at 188. I'd say just be real careful. Now, what today's the clue to say, are we going to see the gold stocks? I tried it on Friday briefly. Are they going to do this? Are they going to make that Chapman wave dreaded H formation, try to bounce and then roll over and take out whatever the low was on Friday? I think some of them are. AEM, what was the other one? Newmont Mining, was it? Newmont Mining? Yeah. 134.48 all-time high on Friday, 118 open. Oh, that was Friday. On Thursday, 118 open yesterday. On Friday, and trading right now at 111. That is pretty. That's almost a 20% decline in just puffs like that. So be careful. They've done absolutely. Look at this. Chapman wave inverted green Roman candle. You have to see all of February. I'm going to give it all of February. Any week in February, if it closes above 122, it's going to go test the 134.88 high. I don't think so. If it closes under Last month's low of 98.21. This week, that's not going to be a good thing. I'll be back in a moment. Basil Chapman, last segment coming up, early edition. I'll be back in a moment.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Folks, we're back. So I was looking at Newmont Mining. Then a question came in about I went to the wrong window. This window right here says it all. There we go. CRML, and we're looking at, this is Critical Metals, Critical Metals Corporation, Mining Development Company, lithium, rare earths for supply chains, makes a peak D, Chapman Wave peak D, got to look, there's the D, the card fell after that, look at another one, peak ABC, D goes to a high, not an all-time high, goes to a high on the 26th of Jan, at 21.86 trading right now, and then closes at 13.17 trading at 14.40. So he uses 200, this 914 with a 9 green, still way above the 14. You got to look at it and say, okay, what's happening here? Is it possible that we're looking at the spring-loaded move to the upside? I think it's premature. I think it's up $1.23 at 14.40. I just be a little careful. If you think of using this as a trade, wow. It's a little dangerous because the pullback was way too steep from 21.70 area to $13.7. I mean, whew, 30, almost a 30% move. Now, be careful. You can use it as a trade, but make sure you put your stops in. What am I looking at? I'm looking at the chances are that there's a bounce, an arching over, and the retest of the low 13s. If we break 13 support this week, it says even in the critical area of mining, rare minerals, lithium, etc., there's a bit of a problem. And that's the way I'm looking at it. Look, if you go to LIT, look at that, peak G at 75 in the 75s, trading at 69, at 70 right now, only have 14 cents. Leg D in the weekly. I think that a lot of things are looking for a rest. That's all I'm saying. And just have respect for that. And don't be too excited. We've cut back, we've raised cash, taken a little bits off, and got some shorts on, trying to get a short on, trying to get another short. We'll see if that works. Check out my Opening Call Daily newsletter. I went through this all on my video on Friday, over an hour and a quarter. So yeah, have a great day. Right now, you're going to be going to Tommy O'Brien.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure.